Hello, good morning, everyone. Welcome to our live morning session and market update for September 11th of 2017. This is George Pappas of TRADEPRO Academy. I want to say I hope you guys have had a good weekend. I do want to preface it by saying this as well. Today is actually the 16-year anniversary since the senseless tragedies happened in September 11th of 2001. So before we begin, I want to send out the message that our heart goes out to all the victims and their families. I know that no amount of time will heal the loss of life. We're with you guys. Stay strong, stay positive, and let's move together, united. But we can't forget. We can't forget the events. Despite time passing, the people that are impacted by it, hearts pour out for you guys. We're here for you. All right, let's move together as a group. So I wanted to start off with that message. Slipping into the markets. Also, I want to kind of excuse the camera quality here. It's absolutely atrocious. I'm hitting the road once again, so tomorrow's morning market update will be delayed. It won't be delayed. It actually won't happen at all. We'll probably be back on the Wednesday or the Thursday. I'm traveling into Europe, back to the motherland, so I'll be there for about a month. But I'm on the road, and I don't have the webcam here. I'm going to have to go out and purchase a new one today, so I promise you guys next video will be better quality. Let's get started. In Asia, Japan is up a whopping 1.4%. So equity markets are strong across the board. That's on the back of a relief rally based on Hurricane Irma passing by. We'll talk about all that in a second, talk about the damage and what it means and how we're going to trade it as well. All right, Hong Kong's up 1 percentage point, China's up 0.4%, and India's up 0.6% overnight. In Europe at midday, London was up just over 0.5%, Paris was up 1.2%, Frankfurt up 1.1%. And here in the United States, Dow Jones futures are up 0.6%, S&P is up 0.6%, NASDAQ is up 0.8%. So the tech sector is a little bit stronger starting out in the pre-market trading here. Keep an eye out for that. On Tuesday, tomorrow, is the Apple Developer Conference. Keep an eye out on Apple shares very closely today and tomorrow. Keep that on your chart. We're going to be doing the same in the live trading room. I'll be looking at a chart of Apple on a 5-minute basis, and I'll be using that for correlation. I won't be trading Apple, but I'll be looking at it for some hints and cues and ideas of where the tech sector is going to go. And wherever Apple goes, the tech sector will follow, and then the broad market will follow along with it, whether it's up or down. So look at Apple for correlation. They have a big developer conference. We're hearing that Apple had some supplier issues, so that's why the downside pressure on the stock is there. And supplier issues means less inventory to sell. Less inventory to sell means less sales, which means less profit. All right, it's a pretty easy chain to follow there. So that's why there's some pressure on the stock. It's going to be called the iPhone X. That's what we know about the X, the iPhone X. They ran out of names. I mean, how hard is it? Just say the iPhone 8, iPhone 9. Keep counting up. But the iPhone X is a new rendition. So that's coming out tomorrow. We're going to hear more about it from Tim Cook and Apple. Keep an eye out on that. Crude oil is up 0.7%, rallying pretty strong out the gate. Gold is down 0.7%. In our live market analysis on Sunday last night with their subscriber base, we talked about how to trade gold. I think the upside on gold is over temporarily the next 1 to 2 weeks. You got to look at some downside. Too many people are on board the long gold trade. We're long from 1274. We cashed out at 1329. I think the pullback is happening right now. We're going to get a chance to get long, and I'll let you guys know when. Right now, just get out of the way. If you haven't bought it, don't buy it yet. There's more selling to come on gold, all right? Treasury yields. The 10-year Treasury yield's up 3 basis points at 2.09%. Today's economic calendar, we don't really have much. We have an auction at 1 p.m. That's it. That's the sole event of the day at a $24 billion 3-year note auction at 1 p.m. Eastern time. All right, let's talk about Hurricane Irma. So it's over. It's not over. It's kind of hit the coast and moved northward. But the good news is the most tragic, most dire scenario that was painted by the forecast team, by weather specialists, didn't happen. So it wasn't as bad as we anticipated, but I'm not saying it wasn't bad. So the Floridians out there, we hope you guys get back online. We hope there is minimal damage for you, and we hope that the better case scenario was a good thing for you. I'm relieved. I'm happy. I hate to see humanity suffer. I hate to see humans be in that situation, but still it caused a lot of damage. Here's kind of the fallout numbers. It made landfall as Category 4 on the weekend. It's now a tropical storm, so it's been downgraded Category 1 to tropical storm. It's on the borderline, so it's lost its intensity. The damage won't be as great going forward. The market likes that. It's a relief rally. Okay, it wasn't the worst case scenario. Things are going well, so equities rallied up overnight. About 12 handles on the S&P 500 as of the open of the 6 p.m. futures, and we got about 325 contracts traded. Decent volume, all right? The relief rally is on. Gold is down. Equity assets are up. Traders are getting back into risk, at least temporarily. I think the beginning of the week, we see some upside on the passing of Irma, and then we're going to continue to explore some more downside prices as the week unfolds. This Friday is options expiry. It's actually the quad witch. Options expiry on index. Futures expiry on the indexes as well, or the indices, stock options and stock futures, which that's the quad witch, used to be triple witch, then they introduced single stock futures. All right, so we're going to have a volatile week. There's going to be a lot of opportunity for us. Let's talk about a little bit more about Irma. 6 million people are without power, and the surge flooding caused quite a bit of damage as well. There's some crazy videos that we were watching online, and I was saying, oh my goodness, this looks terrible. But it's moved forward. 6 million people still without power. They're going to come back online. The federal flood insurance program in the United States, there's 1.7 million policies in Florida, all right? So Florida has the majority of the flood insurance in the federal program in all the United States. They have the most amount of policies in that state, all right? 1.7 million policies in total. The estimated damage based on those policies, $49 billion. It's going to be covered by federal flood insurance. The total damage, however, if you take into account the damage to property, to businesses, to individuals, all right, to housing, to condos, to the ground floors of everything that's been flooded, that's going to add up. There's crazy estimates from as low as $49 billion to as high as $400 billion as an all-set total number, all right? This kind of damage will impact the Q3 GDP. Q3 GDP in the United States is set to drop by about 1 percentage point to account for that. So the silver lining in that is the market will shrug off any kind of bad economic development and say it was Irma's fault. It was Harvey's fault. Blame the two of them. All right. I keep saying Irma and Harvey should have just had a destination wedding and married off the coast and have never come to the United States. That's my crummy little joke. But they both swept through the coast. All right. So here's the deal. The two of them are going to be blamed for some economic weakness, whether it was hurricane related or not. All right. There could be something out of California that's a little bit weaker in the economic front. They're going to say it's Irma's fault. Somehow they'll link it. So we've kind of given the silver lining and all this. We've given the market a little bit of a free rein to underperform, and it's okay. All right. So that's what you have to know. That's the impact of the Q3 GDP being revised a little bit lower. But there are a lot of economists that are predicting Q3 GDP lower, Q4 GDP lower, and 2018 Q1 will start to see a recovery because of this. All right, so we got half a year. There you go. We just bought us half a year of subpar market conditions that will be blamed on the hurricanes. So again, my friends in Florida are okay. We have communicated with them, and I hope yours are too. And if you're in Florida, I hope you're all right as well. And thank goodness it wasn't as bad as anticipated. So that's Irma in a nutshell. The things you can watch for is reinsurance companies and insurance companies. They're going to be on the hook. They'll probably get pushed a little bit lower on bearish pressure. You could look to buy some puts on them through some options trading. We teach you how to do that in our options education course, how to set up a trade, how to qualify it and execute it for maximal and optimal opportunity profits. Okay. That's what we do. That's kind of our whole bread and butter. Options trading and day trading as well. We have the two different separate sides of the market. We teach how to day trade. We teach options trading, swing trading, which is more passive, and then more active on the day trading front. All right. Next thing we're going to talk about is the United Nations is looking to put fresh sanctions on North Korea today. There's going to be a vote. Watch for that. That might cause some market volatility. I have no idea when that timeline is going to be. They want to impose an oil embargo on North Korea. So want to block all imports or exports of oil, rather, from countries into North Korea. I read a study that if that happens, North Korea will be all right. They have a lot of stockpiles. Also, remember that China has said that they'll back North Korea in the event the United States strikes first. China's already said we're going to have to defend North Korea in that situation. They're our neighbor. That statement kind of was uncovered in main media, but it happened. Okay, you can't just read and watch all media from the United States because it's going to have a bias to it. You got to watch world media, and I'm not talking politics-wise. I'm saying trading-wise. You need to know the real picture, and you got to follow other news networks. Start to look at websites that offer the alternative angle, like Zero Hedge. It's a phenomenal website, zerohedge.com. All right. You also have Al Jazeera News Network. You have the China People Daily. You got the Russian Insider that provides you some perspective from the other side of the world. And what I want to tell you is don't take that article and just look at that article and say, this is all I'm going to believe now. Don't pick things that you like in the market. That's not your job. Your job is to take the net sum of the total data and decide the truth. Russia will say it's here. United States will say here. The real truth lands somewhere in between. All right, start to use the brain that you've been given and analyze this data. Don't take anything at face value. Be critical. That's your job as a trader. Sometimes you got to put your own beliefs, political views, and interests aside and start to look at the grand picture and put together and construct the trading idea. And that happens by looking at multiple sources. So I hope that was helpful for you. Look for that. North Korean sanctions at some point are going to be announced today. That might impact the market. All right, oil's catching a bit at the moment. I'm looking at the price of oil. Actually, it's selling off on the open 47.72 on the contract. Trading now down about 47.38 through the overnight lows. But oil was a little bit stronger overnight on news that Saudi Arabia has discussed the possibility of extending their oil production cut between OPEC and non-OPEC nations. All right, they've discussed that with Venezuela and Kazakhstan, trying to include them in this oil cut agreement. Just so you know, the current pact is due to expire March of 2018. So we still have a lot of time under this current cut quota, and the talk is they're looking to extend it from even March. That's really far out. That put a little bit of a bid in oil prices, but I think oil is going to be weak in the next little bit, in the next couple of weeks at least. It's an oversupplied market. Demand is down from Hurricane Irma, but I want to tell you guys this. It's a twofold story. A lot of news outlets covering this event will say, all right, well, Hurricane Irma is gonna kill the demand for oil because obviously residents that are flooded are not going to be driving around as much. A lot of cars are damaged from Harvey and from Irma, so there's going to be less consumption of gasoline and oil-based products. But the other side of that at the same time is the reconstruction or the rebuild process is very oil intensive. Think about transportation that you got to get going for the rebuild. All the materials you got to bring in, a lot of them are oil based. All right, so these kind of events, while they create tragedy and they create a lot of damage, the rebuild efforts actually creates a pickup in economic activity, as sad as that might sound. So look for a little bit of a stabilization act there. It's a two-sided sword. All right, it's a double-edged sword. The other thing I want to leave it on is Irma and Harvey are over, but we do not know the damages. If the damages are more than expected, that could drag on the economy. It could drag on the stock market. So right now we have a relief rally. The relief rally means, phew, I'm relieved. This wasn't a massive catastrophic event. And I mean, that's subjective too. If somebody's house is ruined and insurance isn't paying for it, I think that's a catastrophic event to that person and that family. But as a whole, because the worst case didn't happen, it might not be catastrophic, but damage has been done. So what I want to tell you guys is the following. Watch for this relief rally to be short-lived. Get on board the relief rally. I'm not telling you to short the market. Go with the momentum. If there's a lot of buying today, heck, go with it. Pick a low, get in, ride this day trade higher, close out the day with some cash, and laugh all the way to the bank. But I'll tell you this much. Be very skeptical of relief rallies. A relief rally just means I'm relieved it wasn't the worst case scenario. Wow, that wasn't the disaster we had kind of anticipated. Stocks pop up or along with risk assets. Everybody's high-fiving and all happy. And then they look around, they say, wait a minute, we still have global and geopolitical concerns. We're still really not that much better. So it's kind of like something hurts. You take an Advil, it stops hurting. You're like, wow, this is great. But why'd you get a headache to begin with? And will it come back? I think the real assessment is just beginning. I think the drag on the economy is going to be a real thing, and watch out for that in the long term. In the short term, all the momentum's on the bullish side right now. Look to buy dips in today's session. I think that's the opportunity in equities. Look to get on board a short gold if you want to day trade it. Look for a short oil as well if it holds below the overnight low at 47.40, which right now it is. And that's kind of how you trade today. All right, guys, I hope you found this useful. If you do, please like the video, please share and subscribe to our YouTube channel. We got a lot of great content coming to you guys. Our job is to give you information to help you trade better, to help you be more successful. That's all that we do. This is the reason I wake up every day. I love my job. I wouldn't do anything different. All right, we're here for you guys. Let us know in the comment box what kind of things you want to see. If you have any questions, we monitor all the comments actively, and we're here to help you guys even via YouTube. So have yourselves a great day. I hope to see you at our next broadcast. Remember, tomorrow we're offline. We're back on Wednesday. That puts us on Wednesday, right? Can't even do math. All right, we're back on Wednesday. We're back with another great update. Like, share, comment, subscribe, and we'd love to see you guys in our trading room. Runs every day, 9 to 11 a.m. Eastern, except for tomorrow. I miss one day a month or less. Sometimes I don't even miss a day. I'm committed to this. I'm committed to you guys. Have a great day. Good luck. Good trading. Manage your risk. Look for the upside. Don't get crazy. All right, I'm not saying sell your car, sell all your possessions to buy the S&P 500. I'm saying day trade the upside, but look for smart monies to start pumping the bid and start hitting some shorts as we get higher. The higher the price goes, the more attractive it is to start selling on the institutional front. If you have a huge book of assets, all right, imagine being a big trader with a massive long position. What you're doing in today's markets, and not specifically today, but overall, currently what you're doing is selling rallies. Our analysis on the weekend showed that. I showed their subscribers why that's the case. The big smart money is selling on rallies. What you need to do is get on board the momentum, ride the rally. When you see it transition to the sell side, and you can see it with the tools that we use and tools we teach in our day trading course, get back on board onto the downside. Have an idea, have a bias, but don't get killed by that bias. Trade careful, manage your risk. It's going to be tricky, but there's going to be opportunity. All the best. Take care. Over and out. See you guys tomorrow. I don't know why I did the air guns. Air guns. There you go, guys. Take care. Have a great day. Let's open up the trading room. Adios. See you on Wednesday. And we'll talk then. Goodbye.